Hey, all right, Poodle family, here we are back, episode 11, live, 1900 UTC, Wednesday. Again, we are here. I can't believe we're rolling into the double digits now. This is fantastic. I'm really excited about this. I wanted to take a moment. I'm going solo this time, and I just wanted, we're going educational. We're doing educational episode this time because, as I mentioned last time, we had a great one with Crypto Kicks, but we had noted that week. Hey, everyone there on the chat. Last week, we changed our tokenomics, and there's a lot of people out there wondering, what does that even mean? What are the advantages, disadvantages? How does it play into how our actual token works out on the market? So what I wanted to do today is really just take some time and not really, I'll focus on Poodle, but I really want people to understand how tokenomics actually works. It is an economic system, and I think a lot of people just don't know. So I'm going to go very base with this just to set it up so that you understand how this works and how that can impact our token, how we end up investing it, what you do with it. Maybe if you're looking at other cryptos that you might own, you're not really sure what that means. And so we're just going to talk a little bit about that today. And hopefully this is something when people really ask, they hear the words inflationary, deflationary, distribution, burn. They can say, what does this mean? You can send them to this video. And I'm going to pretty much just lay this out for everybody. So here we go. Let's go through with it. All right. So obviously, Poodle was. I'm making my notes here as I think about stuff. Poodle, obviously, we are on our version 2, right? Which has, as we kind of brought in, we had originally had a 2% tax, let's call it. So when people say tokenomics, it's really just the economics of the token. They often talk about the tax. Okay, is what does it cost to end up actually having that token? Right? What happens when you buy it or you sell it, just like in normal life, right? So tokenomics is just that. Every token is set up differently. Some have different models. We started with 2%. That's how when I originally bought in, then we thought, hey, we put it to a vote and we jumped to 10%. There was a little debate there. We voted again and went to 2% again. So why? And what difference did it make? Right? What was the push to go to 10%? What was the push to go back to 2%? What's the right or wrong answer? Let me tell you, and I'll say this, and I'm probably going to say it over and over and over again. There is no right or wrong answer. There are just strategic decisions for the token of what we want to do and which model will end up working best. That's pretty much it. And really it comes down to is where do you see this being and how do you want it to be used? All right. I think some of the ones that you'll hear a lot is obviously DOGE and SafeMoon, and those are two very different setups, both successful, right? And ours, another different setup. And there's some that have major taxes. There's some that have almost no taxes. So where does it go and what does that mean? So let's talk about this. There's basically 5 various ways, and there could be more, but I'm going to give you the 5 ways that we really think about taxing a token, right? First is redistribution, right? What this means is every time when we're talking about taxing a token, it's both on the buy and on the sell. Think of it this way. It's just like when you get, people don't realize, and this is when you think of total cost of having your money. You usually get taxed twice on your money, right? You get taxed when you make it. You go to work, your boss gives you a paycheck, the government takes the money out, right? It's in different amounts to different people, but essentially you get a percentage of of what you make taken out. Consider that the same as when you buy the token. When you're putting your money in to buy it for the first time, the first tax is being taken out upon that, and that goes to various things. Now, when you do a transaction again, you will get taxed again, right? This is the same in normal life. When you go spend your money, you usually pay sales tax, right? You go to the store, you get paid. You paid income tax when you got it. You went and spent it on, at the mall. You paid sales tax when you got it. Or if that money, maybe you put your money to work for you and you invested it and you got it back, and you probably get capital gains tax later on it, right? So you get your money taxed twice. This is how tokenomics works in our taxes. You get it taxed twice when you buy, when you sell. You could even say you get taxed 3 times or 4 because you also pay the gas fees for whoever you're doing the exchange, right? Even if you were buying a normal stock and you were to buy, go to E-Trade or whatever you're going to go to, and you buy a stock, they probably have a fee that you have to pay in order to buy that stock. Same thing. When we had version 1 and we were, you paid ETH, and it was expensive. It was very expensive to end up making a transaction. So therefore, we went to Binance, which is much lower, but you still pay it. You pay it based on availability of resources, popularity. There's a lot of different factors there. Maybe that's a whole other episode on its own. But you pay that when you buy, and then the other is when you sell. So you're kind of paying that transaction fee. Think about like a bank transaction fee. It's the same thing. All right. So this is every time you do something, you go through these taxes and these fees. It's no different at all than when you spend your normal fiat money. Okay. And when you go to work and you earn, that's all the same. So next, the 5. Well, that was quite an off topic. I'm loving the chat here. So that's great. This is a 5 things that typically are put into a tax. First, redistribution. Redistribution means this. It means when somebody, part of that money goes to all other holders, right? So everyone who is an investor, think of it as taking a dividend in a normal stock, right? If you own a certain amount of Apple or Google or whatever, when they pull profits, which is really when somebody else sells or a transaction one buys, that's basically it's pulling profits. And the pulling profits is then redistributed to everybody who owns the token based upon the percentage of the amount they owe. So if you owned, 10% of the entire token or percent of the entire token, you're going to get more than someone who maybe owns 1/100th of 1%, right? It's based upon the percentage of the amount that you own, right? Distribution, pretty simple. Burn. This is where it's going to get interesting because we're going to talk about this in a minute after I kind of define this. Burn. Burn means it goes away, right? Think of it this way. There is a flip side of burn, but think of it this way. If why are there only so many old dollar bills out there, right? Because things just happen over time. They go away. They get taken out of circulation in order to maintain the value of dollars. So we can the government prints new money. Print new money that creates inflation. The more that the less it is, then they can balance it that way. Burn is essentially the same thing. We're saying we're taking a certain amount of the total allocation and we're saying bye-bye with it, and it just goes away. So if, for example, there was $1 trillion to start, 10 trillion to start, 100 trillion to start of something, and they're burning, let's say, I'm going to just say, if there's $1 trillion to start and they're going to burn 100 billion a year, well, then year 2, there'll only be 900 billion left. Year 3, then there would be 100 billion left, right? Until all of a sudden it gets down to 0. Now, we usually do it based on percentage, right? Not an amount, but a percentage. So therefore, it will technically never hit 0. That makes sense, right? So if you were to take out 2% or 1%, like so, Poodle currently is at 1% redistribution, or 1/4% in burn. 1/4% in burn. So that means that a very small amount is being taken out, gone, disappears forever, right? Makes sense. Next one that we have, which I really like, is 0.25%, is charity, right? What is the purpose? We've brought a ton on of why we do this. Why am I interested in this token? Because we give, right? Love, got it. I'll do the shout out to L, right? Wins my little giveaway and put that 500 million tokens over to our charity wallet. So that can go to good, right? So every transaction also gets, basically think of it this way. It's like a donation, right? If you get paid if you were to get your paycheck and you say, I'm going to give 10%, I'm going to tithe to my church every week, right? Everything I make, I give a percentage to whatever organization I believe in. Well, this is the same for us. Every transaction that happens, a percentage goes to our charity partners. So that's rad. Next, important, the marketing cut. So for Poodle, for example, it's 0.25%. This is how we do business, right? One thing we have to understand is that our admins do this basically for free, right? Ideally, they put in the hard work so that the token value grows, and so therefore they end up making more money. But essentially, everything's coming out for free. We've asked many times if we want to get listed. We've collected community money to be able to do that. This just gives us that opportunity to actually take. It's a charity is 3.3. So I've got my numbers wrong. There we go. The marketing splits, for example, are how you can be able to give money so that we can continue to market. We can get on new exchanges. We can bring in influencers. Those things that need to get done. If someone wants to put in chat, fix any of my percentages. The last thing you'll see in a tokenomics is liquidity. Liquidity is this. I'm actually looking forward. We're going to do a full episode on liquidity because there's a lot with that. What does it mean to be locked? What does it not be? Well, liquidity is essentially this. It's essentially taking an amount of our token and saying we are going to lock it in against another value so that it's there. It's actual money. I think it was liquid money. The difference between having cash in your pocket and in your bank account and or money you can't actually get. Like, let's say I were to, buy a bond. If I were to take my cash and I were to buy a bond and lock it away, it's still money that's there. It's my 1% burn. So there we go. We got all these things here. So this is great. If you take all of the liquidity, if you were to buy a bond, right, and you were to end up putting it away, you still own it. It's still money that's there, but it's put away for an investment to maintain the value of what you have, right? It's essentially the way that works. So there we go. I love all this. So that's essentially how our token works, okay? Now, or that's how tokenomics works. Everything is a percentage of that, okay? So I'm going to give you an example. Now, I really wish I should have figured this out. I'm going to try something. We're going to see if this works. I'm going to try something here. I should have tried this earlier. Let's see if I can pull this together. I'm going to try to bring a calculator in here. Hold on. Here we go. I'm going to try to get a media source. All right. I got a better way of doing this. Calculator. Because I don't want to just talk you through it. I want you to see it. All right. Here we go. All right. Let's bring this in. Bring in a web page. Window capture. Here we go. Sorry about this. I should have brought this in ahead of time. Safari calculator. There we go. Okay. You got the calculator. There we go. We're up. Oh, you're not going to see the thing. All right. Here we go. Moving it over to the side. I'm moving over here. There we go. How about doing a live production, producing on display. All right, so I've got some numbers set up. we're going to look at the way this works in real life, okay? So let's say, for example, you owned, and I'm going to make this very simple, you own $1 million of something, all right? So you own $1 million of something, and we had a 10% tax, however that works out, right? that means that out of every transaction, when you buy it, when you were to buy 1 million tokens and you were to have 10% on there, right? You're going to end up paying 100,000 worth in order to get that, which means, right, pretty simple, that if you have 1 million and you subtract the 100,000, you're going to end up with 900,000 tokens left in your bag when that transaction's done. So you probably noticed that when you first bought, you bought however much, and then you ended up with a lot less. So that's basically what happens. Remember, I kept telling the funny story that I didn't know what that was when I first bought, and I was like, oh, how come I didn't get it all? So I kept buying more, and I never got to the amount because I didn't do the math over it. So now, let's say you sell. You're going to end up paying another 10%, right, when you sell. So you're going to pay 90,000 when you were to sell that. We hold, we don't sell, but let's just say pretend you were going to. We're pretending. So now you have to take that 900,000, right? You got your 900,000, you subtract your 90,000. Boom, you're left with 110,000 tokens. So if you were to buy 1 million, you were to buy that, and you would end up with 810,000 left if you were to buy and then sell it. Right? Everything else, this is based on a 10%. This is not Poodle right now. This is just based on 10%. Easier to see. That essentially means that there is a 19% total cost of ownership, right? Not counting redistribution, just so you understand. Total, it is a 19% cut. That would be a total cost of ownership. Easy enough to figure out. Well, let's do the same thing. See how this works. We've got 1 million, right? We're back to our millionaire. You want to buy 1 million, but what if it's only a 2% tax? How does that work? 2%. That means it's going to cost you only $20,000 for that transaction. So if I were to do our 1 million again, and I subtract 20,000, you're left with 980,000, right? 980,000 is left. Easy enough to figure out. So if I were to do, now let's say I wanted to sell that, right? And I wanted to sell that. I'm going to pay 2% of what's left there to do that again. So it's going to cost me 19,600 to do that, which essentially, I'm doing the math really quick for everybody. You would end up with 960,400 tokens is how that all ends up working out, what you would end up getting paid back in for. Does that make sense? So your total cost of ownership there, actually divide that by, how'd that happen? Divide that by the 1 million. Then minus 1. So it's that. That minus 1. I guess I can probably do this in my head. But basically 3.96% total cost of ownership is how it works out, right? If you were to have a 2% tax. I hope that makes sense, okay? That's how this works. It works on what goes in, what goes out. There we go. All right, let's get rid of that. So this is where the difference is. When people were arguing with where we should put our tokenomics, you were really looking at this much. You were looking at, okay, after all of it, what am I going to end up with? Now, we have to talk about which one is better. Which one is better, a higher or lower? Now, the argument before was if you have a higher redistribution, let's talk about the things that most people care about. It's the it's the redistribution and the burn, right? Those are really the two that you see a lot of. Okay, so let's talk about redistribution. People say, okay, well, redistribution is better for people who were to hold, right? If you can just keep holding, you never sell. The more value, the more that goes to redistribution, the more you're going to get. And therefore, your balance goes up. So this is where you want to look at the difference. Can you overcome a high tax based on the longer you hold, the more transactions, the more you make back? In theory, yes. practice, not necessarily, right? Then, and I'm going to get to why that's the case. So, and then if you had a lower one, right, you actually have less total cost of ownership, but you would end up needing a lot more in order to end up making it up. Hopefully that makes sense, okay? So now here's the thing. A lot of it has to do with volume and volume of trade. This is where economics actually comes in. This is where tokenomics is most similar to normal economics. And I know that this is probably going to go crazy over the chat, and there was a lot of debate about. But the fact is, here's what happens. The higher the taxes, the less somebody has to use and the less likely they are to spend it, right? So when you're a new token and you have a higher tax, you're basically asking someone to buy in at a higher amount, right? But now if they're holding and they can convince others, you can make up for it, right? But the problem is now you're putting a higher total cost of ownership for someone who isn't sure, right? This is where things like market cap comes in. How much money are people going to be able to put in? How much trade volume? So if it costs people more money, they're not going to trade. So, and I know we talk about this. This is what's interesting. We all talk about that we all want to hold, and that is true. We all do want to, but the problem is if everyone actually bought and only hold, we would have no trade volume. You would get no redistribution, right? Trade volume is actually one of the things that is the biggest ability to make up a percentage, right? So if you were to look at it this way, if you could get at 1%, I'm just going to use easy numbers, a 1% redistribution versus a 10%. Well, if 10% is such a high tax that people don't want to buy in, and therefore they don't buy, you're going to get very little. However, if you could get 10 times the transactions on a 1%, you end up making the same amount as if it was 10%, if that makes sense. Now, trade volume also makes us trend. It actually makes the price go up. So the amount of volume of moving, when the coin moves, when the token moves, that's important. So we talk about this in normal economics. We talk about it all the time, actually. And the government puts out stats every year about, how our government, a stagnant government is a bad thing. Stagnant economy is a bad thing. You want people spending money. The same dollar can go further. I could actually write this out too, but let's say something. Let's say we have $100, and I go to that $100 and I were to go take it and I were to, I'll pretend I used it on a hairdresser. I'll pretend I used it on a hairdresser and I gave it to the hairdresser. They paid their tax on it, right? And then they just held on to it. That's it. Stagnant economy. Nothing else happens, right? Now, if I make that tax so expensive that they don't want to spend it, because now they're going to lose when they spend it back, right? So that if I paid $100 to them, they only got 90. They want to spend it. They're only get $81 worth of value, and then that 81 is going to spend it at 10%, and now they're only going to have $73 worth because of their because they're going to pay 8.1. Then that 73 is a $7 tax, and now you're at 67, right? So the value of that 100, by the time it's transferred 4 or 5 times, is down to about 60. Now, you hope that redistribution ends up accounting for everything, and that's where redistribution comes in. But now, what if it's only 1%? Okay, so I do the $100, and I pay someone to get my hair done, and they're going to pay the 1%, so they have 99. Now they have more, so now they can buy more goods. They actually think, hey, maybe I can spend it, even if they spend some here and some there, because now they're only going to pay 1% on it. So what happens with an economy is the more money can transfer, the higher value, the further it goes. So for example, a 10% tax, the same $100 would be down to around, I think it was 67. I just did the quick math in my head, is really only worth about $67 or so by the time it's transferred hands 4 to 5 times. But at a 1%, $100 by the time it's transferred 5 times is still up in the 90s in its value. That makes it more desirable. So that's why you end up seeing this. That's why we see the we see tax incentives. We saw it during COVID, where we were allowing people to defer taxes or get tax breaks. Redistribution was essentially kind of the same when we'd hand out stimulus packages. Right? These are different ways of doing that in our normal economies. Okay, so that's really what we started to see. This is why it has worked for us to have a smaller, and I've noticed it in my redistribution, even though once we lowered the tokenomics, volume went up, which helps you price go up, okay? And then you end up making it back. So that's how you can make back your burn, your trade, all of these things, right? That's what's important. Now, another thing to notice is burn is an important thing because you have multiple tokens, ways of doing it. You can do, actually, there's 3 options. Right? You can have the amount, if 100 trillion of something is made on day 1, it stays and there's always 100 trillion of it. You can have deflationary, which is what POODL is that over time it is going to go down, right? As you burn it, you have less supply of it. And then of course there's inflationary, and inflationary means that you can actually print more of it, right? This is what happens when the government prints more money. Then you end up with a higher supply. Now, ironically, let's look at some of the more popular, meme tokens that have been out recently. Dogecoin is an inflationary coin. There's always going to be more of it, right? It continues to print more, and yet its value is actually staying up. And I'll get to why in a bit. Then take Bitcoin. Bitcoin's going to have a certain amount. You can still mine it. You can get there. But once it hits a certain amount, it's done. It's a set amount, neither inflationary nor deflationary. Its value is based on what's there. It's kind of like, think of it as, when baseball cards are printed, only so many are going to be printed in 1 year, and that's it. And so over time, if it becomes valuable, it goes up and goes up and goes up. And that's how that works. Then deflationary is, one of the bigger ones would be, say, SafeMoon. Actually, most of the altcoins, meme coins that are coming out right now, meme tokens, are pretty much deflationary. It's the popular thing. There are some out there that are 30%. I've seen that. I think which is just crazy. There's some, I don't know if there's some that are even higher, but I think 10% was kind of a good amount. You've seen a lot of 5%ers. You've seen some 20%ers. But it seems like the ones that are becoming more stable are actually the 2 to 4%, which is kind of where I thought me personally, I was in the 4% was a good amount. Even 5% would have been fine if it was put to something good and we gave more to charity and stuff, but neither here nor there. I think that, so what happens at 2, and honestly, at a 2%, what ends up happening is that we all, you're losing and losing, but you're losing it at a lot less amount, a lot less percentage. But we need to come back to, what does it all mean? It all is based on supply and demand, right? Ironically, so far in the crypto world, supply has not meant as much as normal economics would see. And this is what's interesting, and I'm kind of trying to follow it. There was really early on when we were first discussing that should we move up to the 4% or the 10% or all this stuff. I even ran math. Well, wow, the rate we're moving, at the rate that we are burning now, and our volume, there's going to be so much less of this, and wow, it's going to mean more, right? So, for example, here's how we see supply and demand in normal life. There's only so much oil in the world, right? So if you hold back of it, which is what oil countries do, they hold it back, they make it more desirable because you have to buy it, because you have to put it in your car, and so therefore they can raise the price. By holding supply back, you can raise the price. Well, the problem is, there's no sense of demand, no sense of where supply has been important yet. And I think this is where, when we were using that model, and I think every token has been a victim of this, there's not been a sense that I have to hoard it, right? The reason that supply and demand works in regular economics is because somebody can hoard it. There's a holder of a lot of it. and therefore they can influence how it's going to continue to be used. And we haven't seen that part of it. So the biggest way of saying, I don't know, influence in the value of a token has been demand, right? And this is where I think where we have to notice why it made it good to switch, because like DOGE has continued to, go up. It's gotten popular because it's got demand. People haven't cared. It also, they don't care that, honestly, the few you buy are worth less and less because there's more and more and more being done, but they don't care because it's cool, right? Same thing, Bitcoin, ETH, all these have been good because they're cool. Same thing with us, right? As we were popular, it went up, and therefore you get it. So this is where I think that this works for us. This is where we want to say, hey, we're deflationary, and there will be less of it, which means there will be a supply point, but we have to increase demand. This is where things like the crypto kicks, we're giving to charity, all the things that we're doing to give utility to it is what gives it value, which is what makes it in demand and desirable, right? That's the key. And right now, that's how tokenomics have worked the best. And you have to figure out where it's going to go. Now, another advantage is if you want your token to basically just be a pretty little thing that you keep in your wallet, or do you want it to actually be a commodity? Do you want it to be able to buy things with it? We talked before in the last couple shows. Do you actually want to use this to purchase something, like in a virtual world? You're actually able to use Poodle to make a purchase. You could accept it, right? This is where a lower tokenomics is important, and a lower tax is important, because if I see something I want and I have to now buy. So, for example, let's think of someone. If you wanted to buy something in a virtual world, and I wanted to buy it with Poodle, but I have to use my fiat to buy my Poodle, and then I'm going to use my Poodle to then buy the thing, I've now had to pay that full total cost of ownership to buy something in a virtual world. And then, of course, if someone wants to buy something from me, that percentage is going down, down, down. Like we already talked about, how a higher percentage, less transactions actually bring your value. So if I want to use it as a fiat, let's say I want to buy stuff in a virtual world with it, I want to pay other people, I want to accept it as part of my business, well, now this is where it's important that a lower one, or it's good that a lower one allows it, right? If I say if I'm going to buy something from you and it's $100, you're more likely to sell it because you're going to end up with your 98, right? And then if we were to get it back, or I would spend my fiat and then get it, I've only had to spend 96, whatever it was, to get something valued at $100. And so that's really how all of this works. I think I pretty much hit a lot of the main things and a lot of exactly what people can understand. Now, you'll see all different stuff out there, all the percentage of what goes to what. And, who knows? We may end up changing again. We may continue to change what we're doing. And that's okay, right? Remember, the key is we got to make the money move, and you got to make it desirable. Without being desirable, it's not going to move. And if you make it difficult for people to buy and sell, then it's also not going to move, right? And then it's not desirable. So, long story short, I think we're doing all the right things. I think building the brand, I think in building all these incredible virtual world things, the kicks, the NFTs, being able to do our charity work, all of these are incredible things that we're doing for this token. Do follow, go on the website, continue to look at, see where our money is going and where our tokens are going. And the key is and I didn't really talk about this. Another way to work on this, and I said this when I did my, my license to shill episode of what you can go out there and do. Another way to help supply and demand is to bring more people in. That's it. Bring more people in. If every single one of us grabs one new investor this week, you have created so much demand. You would not recognize what happens to, how many green candles we'll start to see. And what that does, it creates trend, which creates more demand. Again, we're so young in this in the crypto world. All of this is, right? Just back in January, this is why it was like, why were there so many random tokens with all these different tokenomics and which one is best? No one knew. Nobody knew. No one knew. And so that's why we have an opportunity to, now we've been able to see it. We all tested, we played, we see where it fits. Now go out there, build the demand, and all the rest falls into place. Okay. I think that's it. I don't know if there, I was going to look through, and I should have asked people to drop some questions in the chat in case they wanted me to expand on anything more. But really quickly, just so you understand, 5 different things to look at when you're looking at tokenomics: redistribution, burn, and by the way, I should say burn or create, right? Whatever the technical term for it is, right? Again, inflationary versus deflationary. Charity, where it's going, marketing, and liquidity. Those are the popular ones. I'm interested to know if there's other ones out there. And the more you either want to be, something that's just a thing to own, or whether you want to be more of a currency, which is really the way we're looking, then that kind of depends on where you're going to fall on the tokenomics. So all that being said, I hope you enjoyed this one. I hope this was a little bit educational for you all. Hopefully it kind of made sense. There's a lot you can go out there, a lot of articles. You really can Google a lot and just kind of learn more about tokenomics. Just be careful where you're going. Look at a lot of people out there are just trying to spin their thing, and they're going to tell you it's the best one. I'm trying here. You all know I believe in Poodle, but I want you to basically understand it and understand where your money is going. And so let me end with that when we spend money on charity and marketing and putting it into the liquidity, outside of redistribution and burn and all those things, when you start putting it, that means that we have a purpose, right? We're not taking if you had something that was redistribution, but one person owned like 50% of the thing, they're basically just taking all your money back. Well, we're not like that. We're very community owned, very community driven, and we use a percentage to give it back. That's why I love, looking at what's going to go to charities. We're tithing this stuff every week. And we are able to take that and know that money is going back, and we have to put it into marketing. We have to be able to allow our token to work for us. We got to let the admins be able to have that freedom to continue to build and build and build. And that's where I like what we've been able to do so far. And just seeing the work that's been going into it, and seeing how many different ways you can purchase and use your Poodle is just fantastic. So, I'm loving this. I hope I can do some more of these educational ones. Obviously, I might have said some things that people agree with, don't agree with, but hopefully you can continue to have the conversations, learn, and we grow together. With that being said, I really thought I was going to talk for 10 minutes, and I'm 40 minutes into this thing. So I hope that this was good. Like, share, tell 100 of your closest friends. We're still waiting for the final approval from YouTube on exactly getting this thing. I think we have to hit certain view numbers too, but we're pretty close there. So getting this thing so that all these views go support our charity as well. So that's it, everyone. Have a great week. We'll see you next time.